If you're planning to buy a home in the UK, one of the first questions is usually, how much can I borrow? It's a common question, and whilst it sounds very simple, lenders actually look at much more than just your salary. So in this video, I'm going to walk you through how they actually assess your income and what really matters when it comes to your borrowing power. Now, first up is how you're actually paid. Lenders don't just look at the number on your payslip, they also want to understand your setup. So are you paid hourly, weekly, or are you salaried? Maybe you're on a permanent contract, a fixed term, or 0 hours contract. They will also be looking at how long you've been in that current role, because the more stable and consistent your income looks, the better. But that doesn't mean that you're out of options if your job setup is not traditional. So we've helped clients on all types of contracts, so NHS bank staff, non-NHS bank staff, newly employed workers, etc. So after we've looked at your income, there's then committed expenditure. And this is where people are often surprised. So it's not just about how much you earn, it's also about what's going out of your bank account too. So lenders will also look at things like credit cards, personal loans, car finance, childcare costs, dependents, and a lot more too. So if your monthly committed outgoings are high, that reduces how much you can actually borrow. Even if your income looks very strong on paper, you might be looking at a lending figure that's a lot smaller than you first anticipated. So both of these then come together to equal your borrowing power. Now, the general rule of thumb is that lenders will give you about 4.5 times your household income. So if you and your partner earn 20,000 each, and that's 40,000 in total, then they would give you about £180,000 as a loan. This isn't a fixed number. Some lenders can offer more, which can be up to 5 or even 6 times your income, but some will actually offer less too. So it depends on your full financial profile, visa status, credit history, and how your income is actually structured. And we've actually done this for over 400 homeowners with a 99% approval rate and £126 million secured. Now, Jamie was one of them. He was a self-employed first-time buyer and completely unsure on where to start. He assumed the whole process would just be too complex, and like many others, he just needed someone to guide him and explain things to him clearly. But once we worked together, step by step, the entire journey became manageable. In his words, Ripley put my mind at ease, explained the process bit by bit, and helped me to understand everything. He's been an absolute godsend. Now, we've helped so many people in similar situations. People who just needed a mortgage specialist who understands their situation, visa status, and income in order to find the right lender and use the right strategy. So if you're unsure on what you can afford or how your income will affect your chances of getting a mortgage, don't guess, just ask. So feel free to drop your visa type and income structure in the comments section below, and I'll help to point you in the right direction. And if this video's helped, give it a like or a share with someone who needs it.